let's take a look at the day's market movements and some investment strategy. Marcus Bogdan from Blackmore Capital joining us now. Marcus, g'day. Hope you're well. You survived the drama in Melbourne yesterday, no doubt.
Yeah, a lot happening in Melbourne. So very keen to get to that trip to Sydney hopefully by the year end.
Well, yeah, all dependent on where we're at as far as lockdowns and border closures, of course, which are looking pretty optimistic at the moment as far as that vaccination rate. Well, I mean, I guess that's certainly one thing to consider where we're going if you're looking from an investor point of view and how that's likely to influence, of course, where the economy's going and therefore how the market's likely to perform. How are you seeing that picture unfold over the next few months as we head towards Christmas?
Well, the lockdown issue for Victoria and New South Wales is absolutely critical in terms of our recovery. And what we saw in the August reporting seasons, particularly at the back end, was a recognition of the impact of lockdowns and the what that was happening to earnings. And so I think we've had peak earnings growth now, terrific year last year, 26%. But I think it's going to be a far more moderate outlook for this year. And if you just look at this first half that we're seeing here, I mean, those two big economies will be locked down for the bulk of the first half of the reporting season, which we'll see in February. That's going to have an impact. We're also seeing, slower growth in China. That's affecting commodity prices as well, and an intensification on supply chain issues. And so all of those things are really pointing to a more cautious outlook, particularly in terms of earnings growth and the expectation that we might see some further disappointments there.
Okay, so is that perhaps a sign then that you have a lean towards defensive stocks at this point? And I guess we could take a look at healthcare in particular. I know you've spoken of this before, particularly what's going on with Ramsay Healthcare in the UK and perhaps whether that's indicative of what's likely to unfold here.
Yeah, well, we do get a view into the world of what's happening in the northern hemisphere as they've got higher vaccination rates and they're also starting to reopen. But the pressures on healthcare and the behaviour of healthcare globally are giving us some signposts of what we could expect in Australia. So Ramsay, the largest private hospital operator in Australia, but also a significant operator both in the UK and in Europe. And what we're seeing there is that activity levels in those private hospitals in the UK are starting to really ramp up. And that's also being supported by funding increases by the NHS to really tackle that critical backlog there of elective surgeries. So that is definitely positive for Ramsay in terms of their offshore earnings. Whilst elective surgery has been reduced significantly in Australia at the moment, the requirement to treat patients in that backlog, and they will also need to help the public system in terms of that sort of recovery there in patient volume. So net, it's a very positive view on Ramsay that we have over the medium term.
Okay, now Marcus, we talk about what's going on globally, particularly as far as the impact of Delta at the moment. It's still clearly a large impact on those supply chains. How then is that affecting a company such as Amcor, which is that global packaging company? It's because taking a look at the share price, it's actually come off around 8% recently. So what's the drag at the moment?
So you're absolutely right. We are seeing this continuous and even the elevation of the supply chain constraints globally. And so as an investor, what we're looking at is companies that are able to navigate their way through it. Amcor and Brambles is another example there where they're supplying product primarily into the consumer staples industry. And we know that industry is holding up well, and is far more resilient than other industries. And so what we're looking there is also that ability to pass through those higher raw material costs. And Amcor has absolutely got that capacity through pass-through elements in their contracts. And so they have upgraded their earnings for FY 2022. Expectations there for earnings per share growth of between 7 and 11%. Last year, if you remember, they delivered 16%, and they upgraded 3 times over that period of time. So when we do see these pullbacks, and you're right, there's been an 8% pullback more recently, Brambles 11% pullback, they're opportunities that we think that you're getting very strong franchises, and they're actually giving guidance, and they're giving guidance for earnings growth. So both of those things are net positives.
All right, just finally, you're also taking a look at News Corp. What opportunity are you seeing here at the moment?
Well, they delivered a very strong result for FY21. Their key businesses of Dow Jones Digital Property, which is REA in Australia, they're 60% shareholder there, and in a business called Rialta in the US. And their publishing business delivered EBITDA growth of around 30%. We've recently had a conversation with the company. That momentum is continuing into FY22, and overnight they've just announced a $1 billion buyback, given that they've got net cash of over $2 billion on their balance sheet. So that's a positive. The second thing is that next week they've got a Foxtel Investor Day, and there's been some significant improvement, particularly on the streaming side of that business. And so we'll wait and see what happens there, whether they'll try and do an IPO with their other shareholder base there, which is Telstra. But net strong earnings growth expected to continue for News Corp, and the valuation remains undemanding.
Marcus, good one. Thanks for joining us from Blackmore Capital.
Thanks, Andrew.